Chewy reported quarterly financial results on the morning of Wednesday, August 28. The stock price jumped 16% following that earnings announcement. I'll review the figures in that announcement and explain why the stock price jumped as a result of the announcement. Specifically, what was in that announcement that sent the stock price higher? Also, I'll update my buy recommendation for Chewy stock. Coming into the quarter, and in fact all year long, I've told investors that Chewy is one of my favorite stocks to buy. All of 2024, I've reiterated that recommendation. I'll let you know if I still think Chewy stock is a top stock to own after these financial results are out.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So, like I highlighted at the top of the video, Chewy stock price jumping by 16% following the earnings announcement. So let's take a look at the numbers and see what was so good about Chewy's results that investors are cheering. Looking at the highlights, I already noticed one excellent thing about Chewy's quarter, and that was a positive sequential growth in active customers. 20 million active customers. The key here is the positive sequential growth. Chewy's active customers had been fluctuating and declining, and the reason for the declines was because in 2020 and 2021, Chewy attracted so many customers that the churn from those customers from 2020 and 2021 was offsetting new customer additions. So overall, active customers were declining because the removal of those customers from 2020 and 2021 was larger than new customers coming in. And that's understandable because in 2020 and 2021, physical shopping was severely restricted. People flocked to online stores like Chewy, and Chewy added millions of new customers in those 2 years. So it's understandable that some of those customers would no longer be Chewy customers now in 2024. Even some of the best retailers like Costco only retain about 90% of their customers. So a company like Chewy, which is nowhere near the merchant skill of Costco, is understandable that they would lose at least 10% of their customers every year. Now, they didn't give us specific numbers as to how many customers, the percentage, but they did note that active customers increased in the quarter, which was good news. Additionally, the company returned $533 million to shareholders through buybacks. Chewy has for several years now, several quarters now, generated positive cash flow from operations and positive free cash flow. And that positive free cash flow, the company can return to shareholders because it's not in as aggressive of growth mode as it was 2, 3, 4 years ago. The net sales per active customer increased again to $565. Chewy management has told investors that Chewy's customers, as they mature with the company, meaning in their second year, in their third year, in their fourth year as a Chewy customer, they increase their spending with the company. They get comfortable with the website, they get acclimated with the products, and they realize that they can get more and more of their pets' needs from Chewy, so they continue increasing their spending. And longer run, they've been benefiting from this tailwind of the humanization of pets, where people are treating their pets more like people rather than pets. And so they're splurging on more items for their pets, getting higher quality items, buying more toys, buying more comfort items for their pets. And that's all been benefiting Chewy here. Now, one of my favorite things about Chewy's business is this factor here. 78.4% of Chewy's sales are Autoship sales. 78.4% of their sales are Autoship. This is similar to Subscribe and Save from Amazon, where you select the item you want from Chewy and you select how often you want that item to be delivered. For instance, if you want your dog food delivered once every 2 weeks or once every month, you set that rate and you forget about it, and Chewy will just deliver it every month or every 2 weeks, and customers get that added convenience of not having to go back and order that same item. It'll just be delivered at the frequency they want. So that's good for customers. It's also really good for Chewy, because if you know what your customers want, when your customers want it, and where to deliver it, it makes business operations that much easier. You can become more efficient. You can manage your inventory more effectively, your logistics more effectively, and that reduces the cost of operations. And that's important. And I often get the question, why would an investor want to invest in Chewy instead of, let's say, Amazon? Because Amazon's going to crush Chewy. Why would a customer order from Amazon and not Chewy, or vice versa? And this is the big difference between Chewy and Amazon. Amazon sales are nowhere near this large percentage subscribe and save versus total sales. Chewy's sales are the largest I've seen as a metric like this, a percentage of sales, are Autoship, meaning recurring orders. Customers have put those orders in and they just let it come in every month. And that's a big, big benefit for the business. That will allow Chewy to operate more efficiently, generate better profit margins longer term. Speaking of profit margins, the second quarter adjusted EBITDA came in at $145 million for a margin of 5.1%. Overall, net sales increased by 2.6% in the quarter. That was down from 3.1% in the first quarter of 2024. Coming into 2024, Chewy's management told investors not to expect very robust revenue growth from the pet retailer because of that factor I highlighted earlier. They received a lot of business during 2020 and 2021, and 2024, they're churning many of those customers from those years, and consumers have not adopted pets at the same rates they did in 2020 and 2021. In fact, unfortunately, many folks returned their pets after economies reopened because they adopted pets in 2020 and 2021 for companionship. And then when economies reopened, some people decided they no longer wanted a pet. And that unfortunate circumstance has weighed on Chewy's revenue growth. I talked about margins at the top of the video here. In the second quarter, Chewy's gross profit margin of 29.5% was much better than the second quarter of 2023 gross profit margin of 28.3%. Longer term, you can see Chewy's expanding gross profit margin here on the left. In 2021, it was 26.6%, and it's consistently grown to 29% in the most recent trailing 12-month period. All right, so one of the other big reasons why Chewy's stock price increased is because the upgrade of the guidance for fiscal year 2024. The company now forecasts that its fiscal year 2024 adjusted EBITDA margin will come in at 4.6% at the midpoint. Now, this was its previous guidance before this quarterly update this morning. They were forecasting adjusted EBITDA margin at 4.2% at the midpoint. So they increased their adjusted EBITDA margin from 4.2% to 4.6% at the midpoint, even though they did not upgrade their revenue target for the year. Their revenue target growth remains between 4 to 6% year-over-year growth, but now they expect it to be more profitable. And that goes to highlight the factor I talked about at the top of the video, the Autoship sales as a percentage of overall sales. That helps the company drive profitability. So even after the company's stock price jump, it's not trading at an expensive valuation. Chewy's trading at a forward price to earnings of 27.52. And since the company has a long runway of growth, it's just expanding into the pet market. It's expanding now to Canada. And so the runway is long for Chewy. And to update my recommendation, I highlighted that I had Chewy rated as one of my favorite stocks to buy in 2024. I last updated that recommendation on August 16th. I'll update that again today and reiterate that I still like Chewy as one of my top stocks to buy here in 2024. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.